Hi everyone, I'm Roland Kym and welcome back to Canadian Wealth Builder. Today I want to talk to you about something that most people don't think about once they've built some success, and that is maintaining it. Because let's be honest, in Canada we talk a lot about how to build wealth, how to buy your first property, how to invest, how to grow your savings, but what often gets overlooked is that wealth, just like a home, doesn't take care of itself. If you don't maintain it, it quietly starts to erode. A neglected roof, an ignored furnace, a missed payment, a tax oversight, it all adds up. So today I want to explore what it really means to maintain your wealth, the same way you would maintain your home, and with care, consistency, and a long-term plan. Think about your home. When you first buy it, you're proud of it. You invest your time and energy into it, you show it off, you pour your savings into it. But as every homeowner learns quickly, the work doesn't stop once you get the keys. You have to clean the gutters, repaint it, inspect the foundation, check for leaks. Small routine maintenance keeps problems from becoming big, expensive ones. And wealth works the very same way. Once you start building assets, whether it's real estate, stocks, or your own business, your focus has to shift from acquiring to maintaining. Without that maintenance, inflation, taxes, bad spending habits, or even simple neglect can quietly chip away at what you've built and what you've earned. And just like your home, your wealth needs care, or it starts to crumble at the edges from neglect. Let's talk about routine wealth maintenance, the financial equivalent of cleaning your gutters and checking your roof. Here are a few key tips, a few habits every Canadian should practice. Review your financial structure regularly. Interest rates, changes, tax rule evolutions, and life moves fast. Revisit your mortgage every couple of years, and you might save thousands of dollars by adjusting your structure or shortening your terms or making some adjustments. You want to rebalance your investments as the markets shift and evolve. A portfolio that was perfect 2 years ago might be overweight in one sector and underweight in another. A quick review helps keep your risk steady and your growth on track. You want to optimize for taxes, and this is huge in Canada. Use your RRSP to reduce tax income. Use your TFSA for tax-free growth and your FHSA for your savings for your first-time home. Tax efficiency isn't exciting, but it's one of those most powerful forms of financial maintenance that has a real impact on your outcomes. Review your insurance and your protection. As your wealth grows, so should your protection. Make sure your home, life, and disability insurance reflects the current reality where you are in life, not who you were 5 years ago. These are your financial tune-ups, small, consistent actions that preserve the value that you've worked so hard to create. Every homeowner knows that when surprises happen, the roof leaks, the water heater dies, or a storm hits, the same thing will happen in life. And that's why maintaining financial readiness and financial resilience is so important. You need to have an emergency fund. That is a cash reserve that protects you when something unexpected happens. You want 3 to 6 months of expenses, and that's a good baseline. It's the financial version of a backup generator. You might rarely use it, but when you do, it keeps the lights on. With it or without it, there's a big difference. And without it, even a small financial storm can force you to sell investments or rack up debt or derail your progress years down the line. Maintenance isn't just about avoiding problems, it's also about improvement. If you're in a home, that would mean replacing old windows, adding a new heat pump, or remodeling the kitchen. In your financial life, it means investing in upgrades that increase long-term value. That might look like upgrading your real estate, paying off high-interest debt early, refinancing to free up cash flow for new opportunities, investing in new skills that increase your earning potential, or putting capital towards income-producing assets such as rental properties, bullion, or small businesses. Just like renovating a home, raising its resale value, smart upgrades compound your wealth over time. Every improvement, every smart decision adds layers of strength to your foundation, and that's really important. The truth is, most financial decline happens quietly and not suddenly. It's skipping that annual review. It's thinking that everything is fine. It's living just a little bit beyond your means. It's ignoring the small leaks that don't just seem urgent until they cause major damage. Neglect doesn't feel dramatic. It feels comfortable. But comfortable is often where wealth goes to die. Staying engaged in your money, even in a small intentional way, is how you prevent erosion. Wealth, like a home, stays strong when it's actively managed. Building wealth takes discipline, and you've worked so hard to create it. Maintaining it also takes discipline. The mindset is different though. It's steadier, calmer, more protective. It's a lot about stewardship and not that exciting. You don't need to chase every opportunity or take big risks when you're maintaining wealth. You just need to show up consistently to check, repair, and improve what you already own and what you've already created. So here's my takeaway for you. Maintaining your wealth is the maintenance of your foundation. Your home stands strong because you protect it. Your wealth lasts because you manage it. Both are living assets that reward care, attention, and respect. So this week, take an hour to walk through your financial house. Check the roof, test the locks, tighten what's loose. Because the greatest form of wealth isn't what you build, it's what you preserve. Again, I'm Roland Kym, and this is the Canadian Wealth Builder, helping Canadians protect their financial foundation and build lasting wealth, one smart move at a time.